For the last part of our training, we're going to discuss how to translate the knowledge you've gained so far into advisement conversations with students. In this session, we're going to talk about how to prepare for a one-on-one meeting, go over some tools you should be familiar with before the discussion, talk through logistics of the meeting, and cover some high-level talking points for a specific student situation. We'll also provide some links for basic budgeting in the case you need a refresher on personal finance topics as well. After you've recruited your students for these conversations, you should focus on making sure you're prepared to carry out the conversation in a natural, understanding way. First, if it's been a while since you reviewed these loan videos, it's a good idea to go ahead and look back over some of the more complicated topics, like the Session 2 training on repayment plans. Next, make sure that the student has downloaded their loan totals and updated all login information. They should send it over to you, or you should have a quick check-in over the phone, so that you can review the loan information and identify any red flags prior to the discussion. Make sure to make note of any tools you'll need to use to address these red flags so that you can familiarize yourself with the processes. Last, it's extremely important to consider what your relationship is with the student or alum. It's also important to consider what their relationship is to their debt and any emotional burden that the student may feel before you open up very specific methods of conversation. Not saying be afraid to push the student. It's clearly important for them to increase their awareness, but be cognizant of the fact that loan debt is often a stressful reality for many individuals. There are tons of calculators that you can use in your counseling conversations with students and alumni. I'm going to go over two of my favorites, then introduce you to a calculator that CollegeBound created for our students to use. But as long as the calculator you're using is from a reputable organization or a website, then you're really fine. There are a lot of good ones out there. So the FinAid calculator is the one I'm going to go over first. This calculator is very basic. You can see in the beginning it gives you a brief summary about how repayment works and some information about specific loan types, and then at the bottom is the calculator. Let's type in a debt amount here and 4 years in college. As you can see, once you put in that information, it quickly spits out a summary of your repayment, including total interest paid over the life of the loan and cumulative payments. You also have the option to print out your payment schedule if that's of interest to you. And there's more information at the bottom about income-based repayment and an area where you can recalculate if you need to. So this is a really great, straightforward, quick tool to use if you just want to briefly understand what the standard payment would be for some federal loans. Next, we're going to talk about the studentloans.gov repayment calculator. We've briefly touched on this in an earlier session, but we're going to go into a bit more detail now. You can either access this via your studentloans.gov portal or through your NSLDS portal, either way. The repayment calculator is a good option if you want to review different federal loan repayment plans to see what fits best with a student. I often use this during exit meetings with recent graduates because it's a great tool for them to keep in mind once they exit their grace period. It's really easy to log in. It has all their information. They don't have to add individual loans, but they could if they even wanted to go to grad school. So it's a really good, well-rounded tool. And as you can see, if you scroll down, they even can input their tax filing status, their adjusted gross income, and other tax information so that they can calculate what their eligibility would be under all of their repayment plans. Again, as we've talked about before, please don't place any value on these as you're going through this session with a student. It's important that they get the facts and also talk to other advisors and make decisions based on those facts. It's easy to have a preference, but try to keep that removed from your conversations with your students. Okay. The last calculator we're going to discuss is the CollegeBound repayment estimator. This one is even more basic than the other two and only provides high-level estimates for students. It is, though, a great resource for students who have just matriculated or are only partway through their education and want to get an idea of what they might have to pay later on. This is probably the ideal calculator for any kind of freshman transition meetings. As you can see on the left-hand side of this form, it's just a Google Sheet. You have estimates of federal repayment based on different loan brackets, 10, 20, 30, and 40 in debt by the end of their degree. And then you have a similar layout for STLCC students who are only going to be taking out loans for 2 to 3 years. And then you have a final for Scholarship Foundation, again with those maximums. The only thing I would like to point out is that the amounts in the Scholarship Foundation repayment sections here are separate from the amounts in both the STLCC and 4-year federal direct repayment sections. So if a student has taken out both, they should add these totals together. The good thing is that we've done part of that for you, and so the functionality of this form allows a student to put in their total debt for both SF and for a federal loan, which can include Perkins, as well as what they think they're going to be making per month once they graduate. That will give them an idea of what their individual payments are, what their total payment will be, and then whether they're going to have a high debt burden. And that basically just means their payment is a high percentage of their income. This last section here tells them what their ideal monthly payment would be, and it's a good way to gear them towards a better borrowing habit. Now that we've gone over some tools that you can use in these conversations, let's discuss the actual logistics of the meeting. Keep in mind that this training is not going to cover each section in detail. Your manager will provide supplemental trainings for that content as necessary. First, in the meeting, the student is expected to access all loan totals, including Scholarship Foundation, private, and institutional types. Then, they should work through the survey corresponding with their meeting, whether that be a freshman exit survey or an alumni exit survey, or it may not include any depending on the student's age and status. Next, the student should estimate their income by looking at the median salary for their intended careers and places of residence. Then, once the student's debt burden is established, you can cover with the student alternate repayment options and plans for forgiveness. There's even that worksheet that will allow students to draft an entire budget if they opt into the process. It is laid out in a similar manner to other college-bound budgeting worksheets, and I've linked it in this presentation. The last topic we're going to cover before you're able to move forward with the meetings are some links to budgeting basics. When meeting with a student, make sure to give them the opportunity to set themselves up with a budget, whether that be for their current enrollment and income, or for the future, post-graduation. On this page, you'll see some links for resources that will help you walk through the budgeting process with a student. Numbers 2 and 3 are quick videos that will give you a brief rundown on basics. But let's look at the CB budgeting worksheet in a bit more detail. As you can see, the worksheet allows a student or alum to include their current and or projected monthly income as well as their current and or projected expenses, including insurance, credit cards, debt, and otherwise. There is also a secondary sheet that allows a student to further break down their entertainment expenses. This sheet really just gives them the opportunity to see where their money is going throughout the month so that they can focus on creating a savings account or more financially sound or responsible habits. And this actually brings us to the end of the College Bound Student Loan Conversations training. If you have any questions about the process or the details of the training, make sure to follow up with your direct manager for any assistance.